Good morning.
Good morning. Welcome to Trading Day, 14th April 2020. And we have some things that maybe should have happened yesterday. Maybe they did, maybe they didn't. Where are you at?
Right, August. I, I I climbed a little bit, not too much. Zoom didn't jump up too much, and all my puts are worthless basically.
Yeah,
I'm at 3.748 now.
3.748. So
Mhm.
$3,748. Okay,
Yeah,
that's not too bad.
too bad. Zoom climbed a little, eeny weeny bit. I also, shall I talk about a move that I did yesterday
Yeah,
too?
absolutely.
So I made a dumb move, but it's not super dumb, but it's dumb.
Okay,
But it was all like a first time ever. So I tried to do remember I talked to you about vertical spreads yesterday?
yes.
So first of all, I got in trying to buy some calls, but everything's so expensive. I don't have the cash to buy calls right now on those companies that I want to buy calls on. I was like, oh, why don't I do what I called it, a put credit spread, which is
Yes.
essentially Interactive Brokers calls it a bull spread, where what I do is that I already had that space put. I bought that space put for $13 on June 19th. And what I did was yesterday, I sold a space put for $14 on June 19th as well. Um, so I'm betting that it's not going to go down. I
Right.
collected a bit of a premium for it. So yeah, I mean it's quite exciting. I finally did one of these like spreads or whatever. But I'm an idiot because I sold my I sold my $14 space put cheaper than I bought my $13 space put. So you're supposed to like, sell high, buy low, right? Or
Right.
buy low, sell high. Did the
Right.
opposite. So I've actually lost money on this credit spread because after I bought it for 193, I paid $1.93 for it.
Yeah.
It climbed to $2.40. So I missed out on $50.
Oh no.
So I've learned my lesson, and don't be an idiot, and like make sure that like the whatchamacalls it the amount I'm selling it for is higher than the amount I'm buying it for. But anyway, I believe that the maximum I've made, so I made about $193 yesterday. As in added to the cash amount, and the my maximum loss, I believe, is $100 minus the profit I made, because it's 14 minus 13 times 100 minus the actually it's minus it's less than it's over $100 in potential losses because I lost money on this vertical spread. Don't
Right.
do what I did, but
So,
so that's what I
so
did.
basically, you're guaranteeing yourself to lose some money.
Yes,
But
I'm so
in
glad I did that.
in actuality, you've like already lost the money because the put is now worthless that you had, right? So you're now gaining some money back, and the potential is there potential for more loss now after that or no?
No,
Right. So actually,
no,
you've like limited your losses, but you guaranteed your limit.
I suppose so. You could say that I have guaranteed the loss that I could have made from that initial space put at 13, which
Right.
is not what I planned to do.
Right.
Yeah, so you're right. I've guaranteed that I've lost money, but a small amount.
Got it.
Idiot.
Got it.
Anyway, that was my entry. And then right after I did that, I wanted to buy another bull spread on the SPY. But then Interactive Brokers, when you enter the price, maybe, I don't know, I need to research this later, but when you enter the price for this, it's a multi-leg strategy thing, right? So I'm selling the SPY at a lower price, and my bad. I'm selling the SPY put at a higher price, and I'm buying the SPY put at a lower price,
Right.
strike price. But then like it asked me to enter a price, like limit. Do I want to limit the price? And I didn't understand what to enter there, because I'm buying two. I'm selling one and I'm buying one, but then I don't know what I'm supposed to enter for the limit. So I really wanted to click buy, but I decided not to in the end.
I believe limit is because when you buy, you're either buying at the market or a set price. And limit is you're buying at that price no matter what. And if the market is not around that price, it will not get executed. Right? So it's either you buy exactly at market price or you limit. And that limit is you're only willing to transact at that price.
I get it. So if, for example, you're buying one option or you're selling one option, I understand what a limit means. Like in this instance, because I need to get my head around this, but basically when a put goes lower, it's cheaper. So
no,
when I buy the lower put and I sell the higher put, when I'm about to transact the order, I would have expected to have seen a limit price per option that I was buying or selling.
Right.
But instead they combined it into one.
Oh.
Where, do you know what I mean? So I wasn't sure what that meant. I actually took a screenshot of it yesterday because I was quite confused.
Right, because you should be able to set the price that you're selling for, no matter what. And then you should be able to set the price you're buying for. And I thought that when you're setting the price you're buying, that's called a limit.
Yeah, in fact, let me just, we can maybe share this in the video later, but I'm going to just WhatsApp this to you so that you can see whether you understand what this means.
Really good question.
Right? What does it mean? The limit minus 0.29. I mean, I don't know.
On the buy side, it makes sense. On the sell side, I don't know. Yeah, I really don't know.
Yeah, I still actually pressed transmit anyway, and then I was like, no, don't be an idiot. Don't do something you have no idea what you're doing. So
right, if you don't understand it, don't do it.
Huh?
If you don't understand it, don't do it.
Yeah, it's quite scary actually selling a put or selling a call because you cannot I don't think you can get out of it. You're stuck until the expiry date. Until
expiry, yeah. You are the market maker, so you must fulfill that. So if it goes in the money, you must buy the shares and transfer them.
Yeah. So
that's
anyway,
why you need to protect your risk, right? By buying the same kind of put call kind of thing.
So let me figure out what that means, and hopefully I can share what I've learned with you tomorrow.
Okay, cool. All right, I am at $726.84. I'm a bit down from yesterday. And what happened yesterday is that I went to sell some of these things, and I realized that I basically have $0 value in all of my puts right now. It's really like an infinitesimal amount. Maybe I have like $20 or something like that. I'm gonna do the calculation, what the value of my puts are, what the value of my calls are. And looking at the current market sentiment, I said, let's just see what happens with these calls. And I don't have very many of them, right? So also what I did is, I have a Uber call for $29. I have a CCL, Carnival Cruise Lines call for $16, which just went to nothing. I have a Starbucks call for $75.50, which is close to being in the money. The current share price is 73. And these are all expire on the 17th of April, which is just a few days away. And so I looked at these and I said, if the market's going up a bit, then I should hold on to these. And
the calls are worth something now.
The calls are basically all of my value. All of my puts are worth 3 cents, 1 cent, 1 cent, 1 cent, 2 cents, 3 cents, 2 cents, 2 cents. And that's it. And I have some puts in May that are worth about 50 cents each, but I want to keep those. So what I ended up doing was setting limit sell orders for my calls.
And it gets too low.
No, at the price that I wanted
What's
to
it?
get. So I
Okay.
did them so I had like three options of Starbucks for calls, and so I set some sell orders, and then I went to bed, and I did that for everything. Only one of my Starbucks calls was sold, so I earned a bit of money off that, and
Right?
uh, yeah, I didn't really earn money. I just like limited the loss. I earned like a few dollars, I guess, but I none of the others triggered. So I'm trying to set the price to be where I'm actually making a little bit of money off these calls, and
Okay.
so far only one of them has sold. So I am hoping
Hmm.
for a couple of green days over the next couple of days. If that happens and my Starbucks call gets in the money, it'll actually return quite a bit of money. I think it'll return, well, hundreds of dollars, not quite thousands. And then I'm hoping the market comes down after that into May so that I can sell my puts.
Thank you for telling me what you hope. Like,
Yes, that is my hope. I was somewhat surprised and happy that the market went up yesterday.
hmm. Yeah, the market just soared. I mean, you know what this tells me is I think this teaches me a little lesson, which is that like a week ago when I opened up Interactive Brokers, right?
Yeah,
And I wanted to buy a space call, and I was like, expensive. But I was bullish on space.
right,
I shouldn't have changed my mind and bought a put on space. That was silly.
right.
Do you know what I mean? Because I know space really is one of these meme stocks
Yes.
where it jumped 20% yesterday.
Yeah.
So, you know, you really want to like, even if it seems expensive, just go for it. If you have a strong feeling about the direction,
Yeah.
maybe, you know.
Yeah, and
So
the
that was
volatility is
interesting.
insane. Yeah,
Uh,
and the volatility is insane on space, which is great for option trading.
that's why my put on space, the value went up still because of the volatility. Even though it jumped 20%, the value still went up.
That's amazing. So
Mhm.
really we should be playing volatility instead of playing on price. We should look and say,
Yeah, and
we should look and say, is this stock going to move like by 10, 20% in the next few days? And if so, then you can almost buy whatever you want in a way.
yeah.
That's incredible.
I mean, that's why the guy says sell your options, don't buy it. Sell it because there's so much volatility baked into it. But
Right.
I don't know.
So this is interesting. Do you think I should sell against my put positions today? And what I mean is I have these put positions. Yeah, I have some calls as well. But if I sell the options at around the same strike price as my puts that I already have, I could earn a little bit of money today. Maybe it's only $10 or $30, but if the price crosses over that limit, then I will earn money anyway. I will make the money back. What do you think?
Yeah, that's what I would do actually if I'm in your position. Like the profit is limited, but let's say that we have this, what? In fact, I should do that too tonight, right? We have these like SPY 220, 200, whatever's puts
Yes.
expiring in 5 days.
Yeah.
You should sell a SPY. I mean, be bold, like sell, like usually the limit, the margin, you try to keep it small, right? Because that's your maximum loss. But if you feel very bullish, why don't you just sell a SPY 250 put, like expiring on the same day, maybe?
Right. Because if it drops that much, the increase in volatility plus the movement in the direction of the existing put should raise that value anyway.
But it doesn't matter because if it like that, I don't think the volatility will play a role because what matters is the strike price,
Okay.
not so much the option price. So if you sell a 250 SPY put, your gain is guaranteed immediately. You
Right.
get your money today.
Right.
But your maximum loss will be 250 minus 220 times 100.
Right. So you could,
You know what I mean?
in that case, you could still lose money. But for instance, if you already have a SPY 220 put, and if I sold that SPY 220 put, even though I'm not making much money, I would make a little bit of money, but guaranteed not to lose any more money.
Maybe, yeah.
If that makes sense. I'll do the
I mean,
calculations today.
You've already bought a SPY 220.
So for instance, let me take a more concrete example that I have in my portfolio. So for instance, I have a SPY 220 put expiring on 420.
Yeah.
And the value of that is 3 cents right now, right? If I sell that same thing, I will make $3 right away. So 100 times 3 cents, right? So I'll make $3. But if the stock price of SPY crosses over the 220 mark, this current put that I have is going to be worth more than what I have to do to service.
I'll repeat that. Say the if again. So you have the 220. It's worth 3 cents.
Right. And I have a SPY 220 put worth 3 cents per share, which is, so it's worth $3. I want to sell this same put on the market and get some cash. And if, let's say, SPY moves down to 219 by 420,
right,
then the value of my existing put will be worth more than the cost of me having to settle up for the put that I'm selling. Or it'll be worth the same, right? Yeah. So I should do this regardless and try to make a few dollars, because the likelihood that it's going to move into that range anyway is low. And if there's a market out there and someone wants to buy those puts, then great. And already I'm hedged against any loss from that sale by having these existing puts in existence.
Yeah, I think the only reason why, I guess I've never heard of this, or people may not do it that often, is because your profit is very low.
Well, there's no profit. I'm actually just trying to claw back a little bit of my loss.
Yeah.
At this point, I don't believe SPY will go below 220.
Yeah.
That'd be a massive couple day sell-off, right? I mean, it could happen, definitely. It has happened in the recent history, but most likely SPY will stay above 220 through 4/17, through April 17th. And even if it did not, I would still, I think, make a little bit more money than having to settle up for selling this put, if I'm not wrong. Mm-hmm. So I think I'll try this tonight. I'm going to try to sell the opposite positions of the puts that I have and see if I can make $10 or make back $10 off what I did.
Okay, yeah. Also, last thing I just wanted to add to today's discussion, there's this user on Wall Street Bets called Jay Kuzmanov. Did you read that?
No.
And so he's the guy. So I'll just read it to you, and maybe we can. Anyway, let me just go back. 19 days ago, he writes, "Brothers, the time has come for the ultimate YOLO. 780K, June 19, SPX. That's another ETF maybe or something.
Yeah.
1500P. So, yeah, I don't know what SPX is right now anyway, but he just put $780,000 put 19 days ago. Today, he writes, 10 hours ago, feast your eyes on my losses, 689K on SPX puts. Lost.
Wow.
Yeah. And he says, it doesn't feel great, but it could have been worse. I can't afford to go below 100K, so I'm closing things now. But my belief in my thesis remains the same. My only mistake is in underestimating the Fed's willingness to gamble away America's future just to prop up the stock market for 1 month.
Well, then fingers crossed for these May 15th puts, according to him. I don't know if he's just trying to make himself feel better about his thesis remaining the same, or if he really still believes that. And if he really still believes it and he's right.
It's June 19th. He's told us June 19th, but so he's obviously not expecting anything in May.
Yeah. See, so him saying that he expects, like, him saying that the thesis remains the same is incorrect. Like, if he really believed it, he would continue on.
Yeah, he just didn't factor in the Fed.
Yeah, exactly. But that's not what he believes, because he believes the market can continue to go up and he'll lose this money, even more than the 100K.
Yeah.
Brutal. Well, I feel better about my 3% loss now, since it is only $9,200 instead of how much? $690,000, 600 and something.
690,000. Yeah,
oh,
6,890.
Oh man, can you imagine? That would be devastating.
Yeah.
I mean, I'm already pretty devastated. But I'm willing to take what we currently have, or what I currently have, and then slowly make good moves and claw my way back.
Yeah, it's really amazing, this guy, like, how he must be feeling right now.
Yeah.
Maybe he's such an experienced trader that, like, 689, like, he knows he can make it up, make it down.
Yeah, true. And maybe he's managing a fund and not his personal wealth. I don't know.
Maybe.
Yeah, different game, I guess.
Yeah.
So what'd you say? What's your moves tomorrow again?
And I really want to buy some calls, but I think that what I'm going to do is I'm going to figure out what that limit price means on Interactive Brokers, and I'm going to do some short-term vertical spreads just to make a little bit of cash here and there. Just a little bit. Okay, so when you're calculating your maximum loss, when you're playing with these vertical spreads, it's not about the option price. It's about the difference in the price that you paid to buy the option versus selling the option, multiplied out by 100. So, like, I didn't buy Tesla yesterday because I'm looking at the option prices, and I was like, oh my goodness, I cannot afford any of this. But actually, it doesn't matter, because if I just bought a Tesla bull spread at, say, $800 and 700 and 701, my maximum loss from that would be $1 times 100.
Right. What's your
Maybe
maximum
wrong.
gain?
Sorry?
What's your maximum gain there?
Your maximum gain would be a premium that you receive from selling the put at 701 minus the premium that you paid for buying the put at 700.
Understood.
I mean, you can actually, like, make more profit, right? If you're willing to say 700, 710.
Right.
Or 100 and 800, right? Then you make a lot more, because the difference between 800 and 600 is so great. But you also open this huge window to lose a shit ton of money, right?
Right. Basically, every dollar times 100 is your potential loss.
Yeah.
Got it.
Yeah.
Does Interactive Brokers give you a percentage success rate or anything like that, or percent chance of it coming
Yeah,
back?
I'm pretty sure they do. I just haven't. I wasn't looking at it yesterday. I was just looking at I should have looked at it. Yeah, there's a column called probability that you can add to the option chain.
Got it. Interesting.
Yeah.
Yeah. Okay, I'll check it out. Or actually, I was thinking of using this app called Think or Swim. I think it's done by TD Ameritrade or something like that, or they bought that company, and to just learn a little bit more about options and put some scenarios together using that.
On Robinhood, do you get this big option chain thingy or not?
Not at all. You literally just options and price. You don't get to set. You don't even get to set like limits you want to sell at. I guess it's something called
Really?
like a stop limit, something like that. Like if you lose 20% in a day, sell. That type of thing.
Mm.
You can't specify that in Robinhood. You can only specify the price that you're willing to sell for and whether it is a day or forever that you're willing to accept that price.
I see. Yeah, interesting.
Yeah, so they don't have very many advanced trading options, that is definitely a big detriment to the platform. I'm going to learn a little bit about selling puts today and make sure that I'm not doing something silly and that I'm setting myself up for like exponential loss or something like that. Make sure that that's not the case. But exciting. I'm excited.
Exciting.
About
I mean, really hit balls. Real balls. You should try to sell some calls right now. Everybody wants to buy them. You might make a lot of money doing it.
That's a good point. And I do already have calls in place.
And that would be called a bear spread or something like that. I
Right.
have to look it up.
This is very interesting. Yeah, maybe I will. I'll do a little bit of research before trading today.
Yeah. What time were you up till last night?
Not very late. I went to bed around 10:30, 11. But I woke up at 2 a.m. for no reason, probably because I'm worried about this. And then I checked my phone and I saw that basically the market hadn't moved from where it was when I went to bed. And so then I just went back to sleep.
Doesn't it feel like shit knowing that like one of the biggest days you're like barely making anything?
Yeah, absolutely.
All our capital was stuck in all these puts. I wish that we had. Maybe another good learning is to, when we create that video, we should just say, don't spend it all.
Yeah, like try
Really?
to exit positions and then only deploy about half at any time unless you have some crazy chance you're about to take.
Yeah.
Or you know that you're going to not want to check on your positions for a couple days and you just want to like say you want to do a credit spread and use all of your existing capital to do that. Yeah, sure, okay. But then you don't check for however long you allocated all of your capital. It really is a good lesson because allocating all of your capital just ties your hands so much. When you see things moving in a certain direction, like I can't do anything right now. Well, now I have $200, so I can do something, but it's like not much.
Yeah.
As always, cash is king.
Yeah, man. We have so much to learn. I hope that the next time, hopefully we don't have to wait another 10 years for an opportunity like this to to profit. Hopefully we can figure shit out this week, and then next week we can, we have enough cash to start making some good moves.
Yeah, that'd be nice. All right, that's the show. Thank you guys for watching to us talk about what moves we made and what we're going to do tomorrow.
Yeah, and if you like what you saw, please remember to like our video, comment below on what we could have done better, and please subscribe.
Exactly. We'll see you tomorrow.